Hello and welcome to the Saturday webinar on education conducted by the Hindu. Today we are looking at one more aspect of education loans. We are asking the question, okay, you have defaulted on the education loan. You have been unable to pay one EMI. Now what happens? So what does that put you in? We have a panel of, again, two different stakeholders who will give different perspectives, different sides of the equation. For this webinar, we have Mr. Kumar Vajravelu. He's a banker of some 30 years of experience, especially dealing with education loans. He has looked at it. He has a doctorate in risk management, so he knows the risks that education loans entail. So he'll give the industry side of the picture, how bankers think, how they will approach. And we have Aditya Bhargava, who studied in the US and has some experience taking the loan. He's also consulting. He's going around telling students what they should do before taking these loans and what it entails and so on. I will ask Kumaran sir, come in and tell us about the education, your perspective, in your experience, how the education loan system works, what's the process, and what students should know about it.
Thank you, Kalyan. Thank you for a brief introduction, and thank you for a beautiful opportunity to interact with uh, on this particular Hindu webinar. And on this particular education loan, the subject, the life after defaulting on the education loan. See, basically how this education loan is works. Like applications being drawn from the students who got the admission from the premier institute on the studies they intake, and along with that, normally as a bankers, what we do is we try to take his parents or the guardians as a co-applicant or the guarantor, and with that we start processing and the creditworthiness of individual borrowing from based on his father's background. Maybe his father is a salaried person or is a business person. His income proof and as well as his KYC is been taken into consideration, and based on that we arrive at the repayment for them, and based on the request, like what is the moratorium period which we can offer to them, and as well as without the moratorium period, if if it has been given as a secured funding, if the father or the co-applicant is ready to provide some kind of a collateral, we will definitely look in for reducing the interest rate, looking into it, and if it is a non-collateral part of it, we will be looking in slightly a 0.5 percentage more. And the moratorium is basically the exact education period of time. Let's say if a person is going for studies in India for 4 years, the moratorium period will be 4 years plus 6 months or 4 years plus 1 year. Depends on the customer's request as well as the creditworthiness part of it. And we do a processing of this education loan based on their request, and we have a different schemes which is available with the different banks, private as well as public banks, which they can apply for it. And especially after these are basically how this particular process works on it, and looks at the question which is on today's topic, how life will get affected on the defaulting of the education loan. It's majorly affect because they are at initial stages of a life where they're stepping into a career path where they don't have to go ahead with some kind of a black mark on their CIBIL score, because most of the NBFCs and fintechs and as well as the banks, when they recruit, they look in the CIBIL score before finalizing the candidate, and as well as even some of the new companies which they wanted to be very very clear, they are taking the civil scores of an individual, where they look in the credit history from the day one, how it has been repaid or anything without any black mark, so they consider for recruitment, so which is advisable that always. So uh, that don't default on your loan. If it unfortunately, if it has happens, what are the other ways to look upon can be taken care by with an advised by the banks, so they can approach the bank for what are the other alternatives to come out and keep their CIBIL score perfectly from the day one of their career path. So that's it on the process part of it. And I think any questions comes across, I'll be allowed to happily answer that on that particular part.
Thank you, sir. I'm sure there'll be questions. I have questions too. I'm sure people coming into the webinar to participate will also have many more questions. Aditya says that there's no power in his house, but I suppose we can manage. Aditya, tell us what you interact with students, and so what
Yeah.
do you hear from them? What are their questions?
Well, I've interacted a lot more with the management of the colleges because we are starting programs on financial literacy awareness with students soon. But the our focus, I mean, basically, what we have noticed is that a lot of students, even before they take a education loan, they've already taken out small loans in EMIs or in a non-regulated with non-regulated not even financial institutions, Chinese lending apps. So we've noticed one trend that a lot of them have these micro loans, 5,000, 10,000, 15,000 rupee loans, which with companies where which use a lot of predatory practices to get them on board. But when it comes to education loans, basically, we've seen that the average education loan in India is around 12 to 15 lakhs. And when students going abroad, it goes over 50 lakhs. And most of these students, they have no idea about loan agreements. Fewer than one out of five could actually talk about what compound interest or what a moratorium period even is. You know, we are sending 18-year-olds to make 6 and 7 figure financial decisions with less preparation than we give them for even a driving test. So, a generation ago, well, my generation, 20 years ago, um, 2005, when I went to the US to do my undergrad, I had um, my college fees was $35,000. I got a financial aid package and all that for that, so that took care of a large part of it. But we had it was $35,000 and at 43 rupees, which was now 43 rupees to the dollar, which is now around which was 12 and a half to 13 lakhs per year that time. Now the same college, and this is true to all the other colleges, they've increased their the fees, and now from 35 it's become 60,000 for my college, and at 93 rupees is now the same fee is now from 15 lakhs has gone up to 55 lakhs. So the kind of loans that have to be taken, it's skyrocketed significantly. And earlier, people could actually send people abroad, or I mean, study in Chennai or in India with just family savings. You don't have to take a heavy loan, but now like it's become very common. You have to take a loan to study, and a poorly understood education loan could delay a lot of things in life. Like if you're not able to repay, marriage, delay home ownership, children, everything, it sort of just keeps delaying things for you. Um, so we've been trying to come up with a program to sort of help students understand through a financial literacy awareness program to understand why it is important to understand everything before taking a loan, understanding what credit risk is, understand how it will affect your CIBIL score, and take and what these Chinese these apps do to you. You know, they all sit in China, but they have their teams in India who send threatening messages to people, and it can lead to a lot of mental health anguish for people. So this is pretty much what I bring to the table.
All right, thanks, Aditya. So, when the bank is evaluating the loan, do they even look at what they are going to study? What are the job prospects? Do they scrutinize any of that, or is it just a creditworthiness of and the strength of the collateral? What
No,
goes into those decisions?
fine. I'll take this question, Kalyan. See, we will not even only looked upon only the collateral or the repayment capacity of his co-applicant or the borrower. We see what is the kind of education the student is intended to go for it, and what is the period of time, and once he comes out, what is his employability, and at that particular point of time, let's say 4 years by the time, what is an opportunities will be available, what will be his basic salary, which we take an average salary out on that particular period, because that will be the key crux to work on their repayment basically. So we do all that, not only looking at the collateral or the repaying capacity of the co-applicant or the borrower. We do a basic understanding about certain classification. Like if a person is going ahead for a higher studies or in India for an MBBS, so once he completes his 5 years, what will be his employability? What will be his average salary? Or if a person is going for a foreign study with MS in foreign country, or even an engineering degree in India, coming out, what will be his average CTC which he will be trying to get it from campus interview part of it. So based on that, also we decide on is repaying stuff low. So it is not only of the collateral. We do give importance about the study which is ready to undertake also.
Okay, we will take a question. KS Murthy, KMK Murthy. Is it not strongly, so he's getting straight to the topic, is it not strongly advised for the borrower to reach out to the lender to discuss repayment options like restructuring before the loan enters default status?
Absolutely, because it is a wise decision to reach out the banker, because as a banker we will not be knowing what is that particular job opportunity which was available, which he has opted out, or which he has not taken it, which he has not considered, which he has not dropped it. So we may not be sure about, because it is a matter of 4 years. He might have not scored better grade, so he didn't get the better package on the campus interview, or he is not in a position to place himself better. So he will not be in a position to pay that particular amount. So it is always advisable to approach the banker, give your identical genuine situation. This is what is it, and look for some kind of restructuring part of it, which definitely all the bankers will be interested to do some kind of a restructuring and to extend the period of tenure where the commitment will be lesser, where they can start paying out without default.
But what are the options? Let's say I know that I won't be able to pay this month's EMI, my education loan. What options do I have really? What options do banks give?
See, that's what, no, see, as I said, Losik, if we approach us, so we will analyze and apprise on that particular period of time. Let's assume I've seen this particular individual's credentials 4 years back. Now, what is the current scenario? I need to look upon, let's assume I have fixed this repayment of close to 40,000 rupees or something as an EMI part of it, but which he was not in a position to repay on a monthly basis, because his the salary will be very lesser, or he might not be taken up that kind of job profile which we intend to take because of a lot of reasons, which I don't want to get into it, because maybe because of his low grade, or which he might delayed it, or which he might dropped it. all these factors are there. So we will analyze after the year of completion when he intends to come for a restructuring. We may look for extending his tenure so that monthly commitment will come down. Or if he wants to repay only the interest portion for a certain period of time, and where he can gradually improve it on and his income, so we can ask him to pay only the interest part of it for 6 months, and after start repaying along with the principal. So it is a multiple factor. Like, we will not be saying only this stringent one, this is the rule or something, because he is approaching us basically for to keep his repayment track clean. So all the bankers who will be always ready to support them to get the repayment with the ease. One is extending a tenure, reducing this EMI monthly commitment, or only servicing the interest portion for a certain period of time. After that, he can start paying along with the principal.
Okay.
So both the
We'll take
options will be given it to them.
okay.
I
We'll
think
take it.
I clarified to certain extent to them, like it will be helpful for the people who have. I think I have addressed Mr. KM Murthy's question.
Okay. Sure. Um, Aditya Yadav, is there any government schemes for this purpose? Is there any support system?
There is, from what I know, there is the PM Vidya Lakshmi scheme. They've got a website and all that you can go through. I think uh, if you earn under 8 lakhs, if your household income is under 8 lakhs, you can avail a loan at 3% interest and up to a 10 lakh loan. And you can do that for there is a list of colleges in India or universities in India that are part of this. It has to be one of the top colleges, and this is the most well-known one. I'm not sure about the others, but I know that this is a very well-known PM Vidya Lakshmi, it's called.
Yes,
So
but that's
anybody
that's
can
only
go.
for that's only for NIRF institutions, institutions ranked by NIRF in India.
Yeah, yeah, yeah,
It's a
yeah.
fairly limited number
Well,
of
there are
institutions.
860 institutions, so
Yeah, that's
it's
right.
not so bad. Like,
Okay,
yeah.
but it's not study abroad, right? Sir, in
No,
your
it's not.
experience, yeah, tell me.
No. Yeah, you're right. It's for India. Yeah, yeah.
Right. So, in your estimation, in your practical experience, has the education loan component for study in India grown tremendously? What is now? Is it more study abroad or more study in India?
What
It's
I
a
have seen
mixture
them.
of.
Yeah, sorry,
Sorry.
sorry. Go ahead.
Hey, go ahead. Go ahead. Fine. I'm fine.
Go ahead,
I,
Aditya.
I'll I like again just what I've seen from the college students is that I don't think earlier there were a lot of loans going out for education in India, and there were a lot more for abroad. Now, abroad is still going on at the same rate, but the numbers from India have increased significantly because even India, the thing is, the seats have become a lot more expensive. I don't know if Sir agrees with me on that.
No, no, absolutely. You're absolutely on dot, because previously the awareness part of it was not that much, because previously where people who are traveling abroad and taking up at a post graduation higher studies at the foreign countries, they used to come for a education loan. Nowadays the trend is like more of education loan applications come from some of the premier institutions we intend to join here at a private universities, and along with the admission itself, the private institutions give the a certification kind of a letter, which is an admission letter to them, that you can approach the banks for loans. So which gives them the confidence, like, okay, with this particular letter, I don't have to literally excuse my father's pocket. So I have a option of going for a loan with any of the banks with the kind of letter along with the admission procedure itself. Most of the premier private institutions, along with the admission procedures, they given a covering letter which is comes along with the application to us, and it is more from an Indian education institution it comes to.
Okay. I think what Aditya Yadav is asking is there any government scheme to back default?
As of now, as of now, I don't think so. There is no government schemes to back up the default as such.
Okay, there's none. Okay,
So it is only to give the loans we have a schemes, but
right.
for once in the case of a default, as of now, RBI or as well as the government has never come out with any kind of a backup schemes.
Okay,
But they advise us to go a little bit lenient on the recovery procedure because it's end of the day the future lies with them. So we always look upon to encourage them to repay instead of
right,
going with typical treating them like a normal customers,
right. Okay,
normal
okay,
defaulting customers, sorry.
okay. So you're saying you treat education loan defaulters with slightly more leniently than other defaulters.
Yes, we will look for always to give more way to give the repayment options which will be shared to them
Okay,
compared to a normal customer. Like
right,
let's example, if on a personal loan customer or a home
right.
loan customer who's
Yeah, home loan.
default.
Let's take home loan.
Yeah. If it defaults, if it becomes an NPA, we immediately go with the Securitization Act of procuring the collateral which they given it to us, which
Okay,
normally we don't intend to do with an education loan. We like to always look upon where what and all the options can be given it to an students on the education loan, so that we can get the customer after defaulting to become normal to repay his loan.
okay. Harshvardhan, he said the biggest question is, will the candidate get some job after education because students don't have any other sources? For me, it's like an educational loan trap. Are education loans trap? There is a general impression that housing loans are a trap.
There is a direct correlation between the more premier a college you go to, the default percentage comes down. So if you've gone to a better college, the chances are like at a IIT or IIM or whatever, it's 0.05%, whereas the average is 8%. So the better college you go to, that's just like a fact, like a figure that I know that. So whether it is the trap or not, it just depends, I guess, on where you get placed, how you get placed after you work. I mean, after you're done with college.
Okay. Okay. So what about smaller loans? You talked about Chinese apps. What about smaller loans for skilling, value addition? There's a little course you want to do that will improve your job prospects.
Yeah,
Does
yeah.
do banks give that? What do you think?
I I don't think that that does not come under an education loan. That just, but again, those also, I don't know, sir, you'd be better at answering this, that it does come with a pretty hefty interest rate of maybe 9%, or I don't know, 11% interest rates or something like this as well, because they're not expected to be a 1 year loan. It might be like a 6 month loan that you are expected to pay fast at a faster rate. So I don't think that a lot of people, from what I've seen, a lot of people aren't taking loans to sort of upskill themselves. It is only for education, and they whatever they learn at college, they try to sort of get a job right after that. Upskilling is done if the college sort of provides it for the students. This is again in masses. There are exceptions. Maybe 10% actually go out there and do programs on their own. But the masses feel that once you're in college, you're done with your degree, you should be able to get a job. But right now, in India, with the kind of specializations in the world, I mean, everything is changing at such a rapid pace, with AI evolving at again such a rapid pace that we don't know what kind of jobs are going to be available in the future. And um, I don't see a lot of people doing courses after they finish their degree. It's while they're doing their degree, and if the college provides it, that's when they're doing it.
Okay. So no loans. You don't really get too many loan applications for Smaller courses, what they call microcredits
Yeah,
and
yeah, 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 yeah.
okay. Okay, Basavaraj Malid. Good evening, sir. I just wanted to ask if a student has already defaulted on an education loan and things are getting difficult, what should they actually do first to get things under control? Is there a sequence? Like, what should they do?
You reach out the banker. Reach out
Okay,
the banker first and find out what is an options can be looked upon. What are the options which they can provide it to you, and to come out from your financial difficulties. And with some more time, if you wanted to borrow it, they can provide you another additional 6 months of moratorium and to start the repayment, which they can agree upon. Or if you really wanted to exit this particular role also, they will be offering a closure of loans with some kind of an interest waivers and other things. The two options are available. If the financial difficulty is so bad that he will not be able to get the funds immediately, definitely banks will always look upon to give an additional 6 months of moratorium, or they can give an option of paying you only the interest portion instead of additional with the principal, so that
right.
you can buy some kind of another 6 months time to only honor the interest portion, which will be very very lesser compared to along with the principal. Then after 6 months he can start repaying along with the principal. That till the time you can look for getting a job, you can be given within a window. So always first reach out the bank, and wherever you have borrowed the loan, and they will be in a position to give you some kind of a free counseling to come out from your situation.
No, but compared to a moratorium,
Yeah.
complete moratorium, you pay nothing for 6 months or you pay nothing for a year.
Yes.
Would you advise that you keep paying interest?
Yes, absolutely. Because it's basically how will be looked upon as intention to repay will be always looked upon.
Okay,
See, okay, we understood, okay, because of some circumstances, is the loan has gone into the default. Maybe because of his poor grades, because he didn't get the actual job, or he might have got a job in which he has dropped it for looking up on a better opportunity, and now he is facing a difficulty. Or maybe he has joined the job, and after that he has been left the job because he was not comfortable with the kind of a job we was intent to get it. All these parameters are there, so I need to give him a breathing time so that he can get back to his job and start repaying it to it. That's why I
okay,
said no. Like banks always look for a repayment from the customer instead of literally, especially on the education loans. We don't intend to go and do a treat them like a normal home loan borrowers or other loan borrowers, because his repayments are different. Here, the young person who is just stepping into his life career, and we have supported him at the initial stages. If something happens on the circumstances, we always look upon to guide him on the financial literacy part of it as well as financial counseling, and we will try to bring him back to the normalcy from the delinquency, and we will try to support him where his repayment can start comfortably.
but you do send collection agents, don't you?
Yeah, we do because it is only to reach out. If they reach us, we don't have to employ the collection agents, correct?
Right.
So I have to reach out to the customer. If they
Okay.
reach me as a bankers, we don't
Okay.
have to employ them. So that's why I said it's always advisable to reach out the banker and reach him, because we don't know what is the happens on the other side of it after 3 years or 4 years.
Okay.
Nothing
Let's
wrong
say,
in reaching the banker and ask for, this is what is my situation, how I can come out from this.
okay. No,
We
let's
are
say there
here
is,
to serve the customers.
okay.
End of the day,
No,
they are the futuristic customers for the banks.
okay. Now, let's say, I mean, you do banks do sell their NPRs to collection agents at certain percentage, whatever. If there's a 100 crore loan, you sell it for 10 crores, and then they try to collect the loan. That's part of the business that banks do. So, how much of that banks do for education loans? Do you, I mean, on a scale of, let's say, 1 to 10, let's say there are 10 cases of education loan defaults, that you're farming out to a company that will collect it, that will purchase the loan as an asset and then try to collect the loans. How much in that, how many are education loans, or is it majority home loans and personal loans and other loans, or which, how much of it?
It will be more of normal loans which has been given it to the clients, like as you rightly said, personal loans, and as well as business loans, as well as vehicle loan, car loan, and
Okay.
home loans, kind of a thing, not on education loan. It will be considered because, as I said, no, we will not be using the similar way of treating the delinquent customer to an education loan.
Okay.
Almost to the all the bankers will treat the education loan customers as somewhat differently than the normal loan customer. And
Okay.
especially, even as you said, now we will the selling of that, or hiving of the book to the other collection agent, kind of a thing, it will be very, 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 very minimal, and to the last resort will be looked upon. Okay, which we were not in a position to recover something, let's book this as a bad loan, then you treat it and move out from our book. And that will be the last resort. It will not be in an initial stage compared to a normal loan, or the normal loan which we given to a staff, sorry, to the salaried guys as well as to the self-employed. So education loans is treated as to the differently by all the bankers, whether it is government bankers or the private bankers.
Okay. We have Katie. We discussed this some time back. We have a question from Katie Arasu. He's saying a political party gave false promise of writing off education loans, but did nothing after coming back to power, obviously. So later the party justified that, saying education loan waivers were beyond their control. Your response to the misleading?
it is it is a tougher call for a political purpose. They make a lot of statements to, especially in the recent elections and all, which
Right.
bankers are not obliged to that, because we under the control of RBI. So
Right.
until and unless something comes from an RBI, so we don't have anything to say on that.
Okay. No, I'm just curious. We hear about farm loan waivers, or waivers to different what actually happens? Does it mean farmers get chutti, they don't have to repay loans, or the government backs it with a guarantee? That does it refinance them, or what happens?
See, that's what. No, see, uh, if they promise, okay, as what are the election campaign promises which they make, and they once they come into the power, and they pass on some kind of a resolutions on the legislative assembly. Based on that, they make a recommendations, and a lot of process involved in that, and they communicate to us with these are the, because they work out a scheme also, like they cannot be waiving off all the loans, so they have certain schemes which they will be coming out with finance ministry at a state level or at a central level, with a clear instructions to the bankers, and this is the loan limit, and this is the category wise. You can very well look upon waiving of the interest part of it alone on certain period of time, and certain part of principal which they will be compensating it. So this is like uh, as a general statement, we will not be able to make it out. It is more related to the finance ministry and as well as the RBI, the notification which will be circulated to the bank based on the scheme which is getting approved, how the government is going to backing that particular part of it. The end of the day, banks as such, we will not be able to do any kind of a waivers. So it is more related from the the government, which can come out with the schemes, like if they promise, they might come out with the scheme, which what is the scheme is going to be, how they are going to back up that particular kind of a waivers, and which particular category they are going to give a waivers. We get a communication, we immediately get implement that.
Okay, it may be time. I mean, in future, political parties may promise education loan waivers too if there's a crisis.
Yeah, absolutely. Because at the end of the day, it's a campaign which they run it
Yeah, they need votes. They need
to
to keep us
attract the voters.
right. Okay, Praveen Chandrasekhar, he's asking, while awaiting an educational loan waiver, interest continues to accrue, leading to a one-time settlement, which has adversely affected eligibility for future loans. Could you please clarify when education loan waivers are granted and how the negative impact of a one-time settlement on the credit record can be resolved? This is really our webinar, right?
Yeah. See, any kind of settlements will definitely impact his credit record, and it is always advisable instead of waiting for education loan waiver or anything. It's always advisable to continue to pay your interest as per the schedule given by the bank, and don't ever go for a one-time settlement with the banks or private institutions, because it will affect the credit score even in the future. As I initially said, even after it is getting settled and you get the waiver and everything and all, it will be there in your credit record till the end of your period. Because any time if you run your CIBIL 10 years, 15 years before you have settled the loan at one time, it will be shown. Even if your current score, after 10 years, your current CIBIL score is really good. But if the credit manager or the credit analyst start looking at your previous credit history, if any settlement has been happen on your loan, it will affect your credit standing. So it is always avoidable to have any kind of one-time settlement with the banks. It is advisable to pay the interest continued. Once a waiver comes in, you will very well, you can claim back the interest which they paid. If the, as rightly said, like if the government has come out with a scheme, so there's the entire interest to be waived, bankers are not going to keep that particular interest which they collected. They will happily repay it to them, because it has been supported from the government scheme. So it is, don't stop your repayment. It is always advisable to repay your interest and never go for a one time settlements.
Okay, here's a very specific question. I took the education loan, um, how much? 2,28,000 from Canara Bank in 2015. Repayment was scheduled to start from 2018 after 1 year from graduation. Unfortunately, I was unable to pay the EMI. At that time, I was doing MTech from IIT BHU. I requested 2 year extension of the repayment schedule and it was approved. In 2020, I got admission in PhD from IITR and got fellowship. Within 3 years, whole amount paid.
Good. So look at, that is what I told you. Even
Right,
after defaulting, also, Canara Bank has given him the kind of extension period of an additional 2 years. That's why I said no. See, if you approach the banker, bankers are there to support you, because you are going to be a futuristic customer for them.
right.
So it's a simple, clear example from Nivas that absolutely authenticating our statements.
Right. I think what he's saying is, um, I mean, he's trying to educate other.
Absolutely.
Right.
He is
Right. Okay. So,
encouraging the next time new borrowers to happily borrow and keep really do good in your academics, because the kind of academics which he has taken it from an MTech to a PhD,
right.
we are there to support them on the financial part of it.
Right. I suppose what he's saying is, we have the tendency to be ashamed to just hide under the blankets, just wish that it'll go away and not communicate with the bank because they may think the bank is going to come after you, send collection agents. That's probably the fear why it may prevent someone from communicating to the bank that they are unable to pay, they're in some trouble. Is
That's a problem. That's a problem. You don't have, see, bankers are there as a normal human beings. We happily welcome that customers to come and reach us. We are here to serve you. We end
Okay.
of the day, you are our customers. We want you to be coming to and asking for us. We are there to support you.
Right. And they're likely to be good customers, right? They're educated,
Yes.
so they have always have opportunities. They will get jobs and they will be able to pay in future.
See, these are the people why we do this education loan. So basically, we would like to acquire this customer from the day one of their careers. Okay, from the education loan, he will be happily to be associated with me. He will be borrowing car loan from me. He will be borrowing a home loan from me when he steps into the career part of it. It is basically at a younger age or the starting of a career, I'm literally taking him into my fold so that we are ready to support it because I'm getting a good customer.
Okay. I hope all banks are benign as you described. Okay, Dipankar Ghosh, do all categories of physically challenged students get equal treatment in getting education loans, especially honing him or her an AI related degree courses? Is that what he's saying? Are physically disabled challenged students, do they get any special treatment, or do banks look forward to giving them loans? Do they have some special schemes?
Uh, as such, so we don't have any separate scheme as such. If maybe the state level, if they have any special schemes are there, or central level, if they have the communication based on that, we can really look upon of reducing the interest rate based on the state recommendations. As such, bankers, we don't have any special scheme for the physically challenged people, but some states who intend to give with interest subvention and as well as an additional moratorium for them,
Right.
and they or even sometimes they given a subsidy also to them, which they come out within a state level recommendation letters, which we will definitely consider that.
Okay.
I think
Harshvardhan
there
is
are,
again asking.
sorry, I
Harshvardhan
think there
is,
are government schemes when it comes to for physically handicapped and all. There are a lot of government schemes available. Just have to do a little research and find out. But for every this thing, like there are for underprivileged women, there are government schemes for people of physical disabilities. There are government schemes in every aspect, and I think it will do more with government colleges or aided colleges.
okay. Harshvardhan is saying, I think the students should take long-term loans instead of short-term. Um, he can't focus on his studies if he has taken a short term. But how do you say it? When you would you tell students to go for 5 year, 10 year, 15? Is it preferable to take a longer term repayment schedule, or they may think, okay, I just want to get done with. I'm quite optimistic about what I'm going to earn. But what do you advise generally? Is long term better or short term better?
It depends on the repaying ability of the student because again, starting salaries are not that great for majority of students. They start at 15,000, and in a lot of better arts and science or colleges it goes up to 40,000, but the average is around 18 to 20,000. So I mean, if you're going to go out and spend on your own, if you want, like there are, I would suggest, or even anybody would suggest that you spread it out over a long term so that your uh, uh, EMI is much less and you actually can save a little bit more and you have money to spend also.
The banker, Kumaran, tell us.
See, I will always suggest, as a personal, as a banker, as I say, I always suggest them to go for a longer term instead of a shorter term. And even if your income is really good, keep your commitment as low. So always we as a bankers, we advise them keep your monthly commitment as low because you're just stepping into the career. You need to stabilize yourself. Once you stabilize yourself, you can very well take up a call. So keep your monthly commitment as low as possible so that you don't have to default. Because as he enters the life career, maybe he'll have his lot of uh, uh, interest to go for a car or even some other commitment to go for a home loans. If he has taken a short term, his monthly commitment will be on a higher side on the education loan. First, he has to close this, then he has to look upon. Instead of that, he can very well keep his education loan commitment as low as possible for a longer tenure, and where he can fulfill his other dreams of buying a car or even a motorbike of his choice, which he is intent to go for it.
Point taken. Ranjit A, good afternoon, sir. Why always the interest is collected first? Why is it that interest is front loaded and collected first and then you collect the principal? I mean, that applies to home loans as well, but I'm just curious. Why is that? Why is it that loans are structured that way? Repayment.
It is basically the revenue for the bank which has to be collected in the first. See, we bought, we basically banks what we collect deposits from the clients and we do a lending to them. So it's a revenue which is basically comes through a way of interest for the banks. That's the main reason of collecting the interest from them, and that's the main reason we do a collection of interest part of it as initial. Principals we can keep it because we have already decided to do the credit for the particular individual, so we can request to make the interest portion to be paid on upfront.
Okay. Adrija KJ. As students, we often have to decide on education loans at a very young age without fully understanding things like CIBIL score and repayment impact, along with unemployment risk. Students from middle class families often hesitate to go for higher education distant from their city. Financial literacy plays a vital role in their decision. Should banks or government take more responsibility in educating us about this? Point taken, Adrijat. I'm sure the panelists would also agree. But
Yeah, I
do
fully agree
elaborate on
on
her
that.
concerns.
I think Aditya's part is coming into the major way now.
Well, I think it's a matter of trust, like I know that RBI has a mandate that they want people to learn about financial awareness, and they want banking organizations and even CIBIL and all these the credit bureaus to run programs across the country and on a large scale. But that's not been happening. A lot of banks that has had started it, including I think ICICI had started it. They had started training centers, but it flopped because people don't want to go to the banks to learn this. They want to go to somebody else because they feel banks will want to push their own agenda. So it is very much required, and banks or the credit bureaus or organizations, NBFCs, financial institutions have to do it, but not directly through them. They should do it with third party people. It should, if it's done directly through them, then I don't think that there's people are going to have that level of trust, which has happened in the past as well. But it is a requirement, and RBI is mandating for these sort of programs to run as well.
Shouldn't banks do it when somebody comes and asks you for a loan? Shouldn't you sit down and talk to them about these things? Or do
We
you?
do, we do. So when they approach for a education loan, and we educate that particular individual who is applying for a loan, what is the impact about it, how the repayment is going to be, what is the collateral, who's going to be your co-borrower, who's your guarantor, if you are giving a collateral, how the interest rate is going to be. As he said, like at an younger age, we do a lot of financial literacy programs for them to understand before taking a loan. Like if it is a normal loan, they know exactly, they share it among their peer groups to understand, okay, this particular bank is offering this interest rate and all. But here, when they reach to us, we do a lot of counseling to them. In fact, like this is the borrowing you are doing, this is going to be your repayment, this is your monitoring period. Your repayment starts from certain period of time, and this is the collateral your father is giving, and you have to look in for a better grade. All that we do before doing dispersing the loan, because at the end of the day, the disbursement doesn't happen directly to the individuals, because it happens directly to the institutions where they are joining. So they come along with the letter based on their requirement. Every year we transfer the disbursement directly to the institutions. So we do a lot of initial inputs or initial literacy awareness to them when they are borrowing on an education loan.
Okay, I suppose we got a good sense of how banks approach. Piece of advice is defaults can happen in this current market situation. You can lose jobs, things may scale down, scale up. So we have to plan for contingencies. But those who take education loans probably should take heart that the banks don't look at you as they don't put you in the same category as, say, home loan borrowers or vehicle loans. So I'm told that they are treated a little more benignly, and that the banks are always they're not going to send collection agents after you if you go and tell them that they're going to default. And what we're also learning is that collection agents are the last resort as far as education loans are concerned. And because bankers see students or just who just passed out as prospective customers, good customers who would take more loans, more repay better in future when their future turns around. So when you default, I think the takeaway is that first go and discuss with the banker. That's probably something defaulters are afraid to do. They may think the bankers will be punitive. I'm told that they are not punitive. They will try and help you out. And as Aditya was saying, this is a process, and it is a very complex decision. It is a major financial decision you will be taking. So do your homework, as much homework as you do for regarding your college, your salary, where it is, what it is. Also spend a lot of time doing your homework on the loan that you're taking, financial issues, civil score, and so on. The third takeaway, I suppose, is that you never, once you default and it enters your credit history, it's never going to go away. It's a black mark that is going to stay forever. If in a future loan, if somebody is going to dig in and look at your past record, it will come up, and that may affect future decisions on giving loans. But broader takeaway is ups and downs are expected. But the banks are not. They do understand and they do see you as good customers. So do discuss with your bank on what sort of offers they can make, offer to pay them interest, which will substantially reduce your monthly commitment, and just keep the account going. So don't go for a default. And we also heard that go for longer term repayments. So keep your financial commitments, your loan repayments as low as possible. So to plan on other things, vehicle, buying other things, your family, and so keep it more long term. So these are some of the important takeaways from this very interesting discussion we had. I thank the panelists for joining. It was quite enlightening, interesting. We will meet again next Saturday at 5 p.m. for another education webinar. Thank you.
Thank you so much. Thank you, Mr. Raman.
Thank you, Kalyan. Thank you, Aditya.
Thank you, Mr. Kumaran.